Today we are going to take a look at the second best investment strategy during a recession. Hello and welcome. My name is Peter B and I welcome you here at My First Million, where we are achieving our financial goals together. So what is the second best investment strategy? Of course, this is only my opinion, but I use this strategy especially for stock picking whenever I invest into individual stock. And so now to the result. The second best investment strategy is being a contrarian investor. So what does this mean? Let me quickly switch to the definition. So being a contrarian is basically a person who opposes or rejects popular opinion, especially in stock market exchange dealing. So you see, even in the definition, they already relate this to stock and investment, so to stock exchanges and investments. So what's the meaning of opposes or rejects? So maybe there's a popular opinion out there, a popular regular feeling, or like a popular ideas that are trending amongst the investment community. Contrarian will take then those information, but will think twice and maybe think about an opposite direction, whether or not this is really the case. And there's one very common saying in investment. I'm not 100% sure, but I think it is attributed to Warren Buffett, which is saying, be greedy when others are fearful and be fearful when others are greedy. So this is the very core of being a contrarian investor. When others are greedy, when markets are high, you should start to be fearful and act accordingly, as differently than most people are doing in the markets. And in contrast, when others are fearful, you should start to be greedy, because maybe that's most of the time a situation which occurs with a buying opportunity. So if taking a look at cycles, so I think most stock markets and other investment opportunities are usually going through investment cycles. This is more or less along with the economy. So if the economy is going well, often the stock market is also going well. But of course, it's not 100% in parallel. So, but often there's like a baseline. You see here at optimism, where the cycle starts. This is a baseline. I would also say you could consider like a fair valuation. What's really the fair value of an investment? And you see that where the cycle starts, it's already upticking. So at that time, people feel quite optimistic about the future. But then it's getting more and more exaggerated. People will then feel enthusiastic, then even acceleration. And in the end, at the peak, generally in the market, you will feel euphoria. You hear maybe sentences like, YOLO, you only live once. This is the next so-and-so. Maybe this is the next Tesla, or this is the next Amazon, and so on. These are very common sentences that you will hear during euphoria. And this in the euphoria is often the point where a bull market ends. So bull market is the upside of a market, when the prices are getting higher and higher. And for instance, like a stock market prices are getting higher and higher. They will usually end at the euphoria level. So what happens next? Usually what comes along with euphoria is that the stock market is already over-evaluated. So at that time, maybe the bubble burst, or maybe sometimes it's not really a bursting of a bubble, but a steady decline that started to spin in. People start to realize it's maybe not everything rose and cherries out there, but also maybe there's some downside and some risks now in the market. So then the market will start to fall. So you will then start, and the feeling is getting worse and worse. Start at the beginning, maybe you only feel like some unease, then maybe there's some denial. It's just a setback or just a correction, and we are all going back again. And then really the pessimism starts. And in the end, you will see even people start panicking often. And then maybe there's even capitulation where people are not wanna investing anymore, where they're going out of the market and think, maybe the stock market is all a scam. And in the bottom of the market, there's even despair. So this is usually when the bear market ends. So at the bottom here, when everything feels very bad, is where the bear market usually ends. And then at the end of the bear market, there will be a phase again where you will start to have hope again. And then you will finally have some relief, or it's finally getting up again. And then the next cycle will begin with optimism and so on. So this is the theory of the market cycle. So as a contrarian investor, back to our topic of this video, when you feel like there's a lot of euphoria, a lot of excitement in the market, everything is good, and a lot of people are talking about how much money they earned in the markets, then as a contrarian investor, you will usually start taking some gains of some of your investments, and maybe also increase your cash positions, because you will feel that there will be a negative down cycle ahead. And again, as a contrarian investor, when you really feel like people hate the market, they don't want to invest anymore, they are running out of the market, they are very afraid of the future, at that point you will then take your cash position and put them back into the markets or into specific stocks. So this is what a contrarian investor is doing. So there's some very common phrases that we have heard recently in very recent history that came along with the last cycle. Maybe you remember FOMO. What does FOMO means? It's fear of missing out. So in the last cycle, at the peak of the last bull cycle, there was a huge fear of missing out. That maybe you remember the GameStop, AMC, and also in the crypto cycle of the cycle of the crypto market, where people just invested their money left and right because they were afraid that they will miss out the opportunities that might be ahead of us. So this FOMO feeling often comes at the peak. Then another common phrase that you have heard maybe also again in recent history is TINA. So TINA means there is no alternative. This is a very common phrase until recently that you would have been hearing from financial news from the financial markets. There is no alternative to stocks. Why people said this sentence is because at that time inflation was still low and interest rates were very close to zero. So in order to generate a positive return, you cannot just put your money into a bank account because you will not get any interests on it. So instead you needed to take the money and invest it into the market in order to get a positive return. So the general opinion was there's no alternative to the stock market. However, as you know, if one or 2 years later, what happened? There was inflation coming up and the Fed started to increase the interest rates. And suddenly there wasn't no alternative anymore. The stock market was collapsing and in decline. So there would be quite a lot of other alternatives out there. And in the same note, maybe what you also have heard quite commonly in the recent histories, cash is trash. So I think this was coming from Ray Dalio, another investment legend, who famously stated cash is trash. At the last bull cycle, especially when interest rates were zero, basically cash is trash. They're not generating any profits. However, if you would have put it into the stock market, you would feel the opposite. You would have experienced the opposite, that it would have been a good decision to keep more cash and wait until there are better investment opportunity out there once the stock market is coming down again. So all these kind of sentences, common phrases that you will hear in a cycle will give you an idea where we are in the stock market, and therefore you can act as a contrarian in the opposite. So if everything is good, maybe start to sell. If the people are saying there's no alternative, maybe there is an alternative. If everyone is is afraid of missing out, maybe the best thing to do is just miss out. And then at the bottom of the market, when everything is very down and people are very pessimistic, maybe at that time is the right opportunity, at least in the long term, to start investing more again. So then one more thing to take into consideration. Being a contrarian investor also requires some traits that you need to take into consideration. So what do you need to be in order to be a good contrarian investor? You need to be, first of all, you need to be very resilient and not emotional. Because this is exactly how those cycles are running. Because people get emotional, they get very excited, and then in the opposite direction, they get very fearful once the pendulum swings to the other direction. So as a contrarian investor, you need to be very resilient and not emotional, and try to analyze the situation, and then have the strength to do the opposite what other people are doing. Then the second thing, again, you need to see something that others don't see. So if everyone is saying there's no alternative, you need to see that maybe there are alternatives out there. Maybe just need to wait a little bit longer for getting those alternatives. If there is fear of missing out, you also need to see that maybe people are just too excited now. So maybe it's good to miss out for now. And the third trait that you need to take along for being a contrarian investor is you need to be able to evaluate your investments. Because in the end, valuation matters. Whether or not you pay too much, a too high price for investment, or whether or not the investment is now a bargain, you need to be able to evaluate the investments so that you can see, okay, also properly evaluate. If people are getting into the FOMO cycle, you can see, but prices are very high. So then you have the relation there that something is wrong in the market, and then act accordingly as a contrarian. Of course, contrarian investing works in a lot of different markets for a lot of different investments. It could be in real estate, it could be in stock markets, even in bond markets, and so on. Also in stock markets, just taking stock market examples, there are two kinds of contrarian investing. One is in general for the whole market cycle, that what we are experiencing now, that everything has been coming down again. So this is the whole market cycle that you can take into consideration for your investment strategy. But then again, also you can be a contrarian on very specific investments. Maybe considering the stock market again, on a specific company again. There are some companies that came down a lot recently that maybe before were overvalued and now are fairly valued, but it could also even be more extreme, that maybe before they were fairly valued, but as the stock market has been coming down, or as they maybe release some bad news, they are now undervalued and therefore provide some investment opportunities. And sometimes you have the situations where both are in line, where both the market in general is coming down and also some specific stocks were coming even more down because they were also in an even more negative cycle, maybe with some negative news attached to it. So as a contrarian, you will try to take opportunity of this kind of fluctuations in the market. Then also, again, contrarian investing, what I want to though give a cautious shout out in general is, as a contrarian investor, try not to time the market. In general, as you see, you go through the cycles. Of course, there's some sort of timing the market in your behavior, but you most likely won't be able to really sell off at the peak and really buy in at the bottom. So most likely it's not a good approach to get all in cash when you think you're at the peak and get all in stocks, for instance, when you're at the bottom, because most likely you will not be able to find the correct timing there. But just adjust accordingly. When you feel you're getting closer and closer to the peak, or that we just went over the peak, that you are taking more and more cash out and build up a cash cushion. And when you feel like now there's a lot of fear in the market, you will start to deploy the money again over time more and more, and therefore are able to get some bargains. So, do you have any experience as being a contrarian investor? Share your experience in the comments below. I would be very happy to learn from you as well. Also, stay tuned for my next video on investing, where I will reveal the #1 best investment strategy during a recession. Of course, also take into consideration what I'm showing it, or what I was talking about in this video is only my opinion alone. So don't forget rule #1 of investing. Every decision that you're making in investing need to be your own decision. Don't just listen to me, but just take this video as an inspiration for further improvements of your investing capabilities. In the end, every investment decision that you're taking needs to be your own decision. You need to take full responsibility and ownership of it. Thanks a lot for joining me today. I look forward to seeing you again in our next video, and especially I look forward to see you winning financially.